We're joined this morning by Muyu Xu, who's a senior crude oil analyst at Kpler, and we've also got Matt Orton of Raymond James Investment Management. Thank you so much to the both of you for taking the time. Muyu, I'll start with you because ultimately, through the last few days of this conflict, and even today, crude has to be one of the biggest talking points for those that have not been involved and that those that have been watching from the sidelines. There was a contemplation of $10 per barrel as a risk premium that was being associated to this conflict, and that has gotten erased. What is the outlook from this point on crude?
I think the drop in oil prices is not something really surprising. It's just a matter of time whether it's gonna the risk premium gonna dissipate like today or next week. Because during the peak time of the conflict, let's say on Sunday, a few hours after the U.S. bombed the 3 Iranian nuclear sites, people were wondering what or how Iran gonna retaliate. But the thing is, there's no single barrel of oil being removed in the market. I mean, the vessels still come in and out of the Strait of Hormuz, and they were doing their job. Yes, some people might be cautious. Some ship owners may want to minimize their waiting time in the Gulf, but still they were doing their business. So right now, we think the oil is just like what happened 12 days before. It was just a knee-jerk reaction. Before it was people priced in the risk premium, but right now is the time to price out. So for us, we do think in the next few days we might see some sporadic missile exchange between Israel and Iran because they still want to save their face. They want to wrap up the conflict before going into the diplomatic negotiations. But from now on, I think the market will be refocusing on the fundamentals. So oil prices will still find some support because right now we are just about to kick in the peak summer demand seasons, and the traffic fuel demand will be supported. So we do think the oil prices might stabilize above 65, maybe hovering between 65 to 70 in the short term.
Yeah, point well noted. And Matt, come in on this. I mean, yields doing what they did after Fed saying what it did yesterday, and then Donald Trump putting out that ceasefire news, oil coming off. Is this a good scenario for risk assets, or some of it was already priced in, you think?
So I think a lot was already priced in. I was actually fairly surprised by the very muted market reaction. I mean, S&P 500 finished up almost 1% today. The NASDAQ was up more than 1%. And you didn't really see many global markets until U.S. trading really trade outside of a plus or minus 50 basis point range, which to me is a signal that risk assets really understood and had been recalibrating over the past 3-4 months to this increased environment of uncertainty, whether it's uncertainty with respect to Israel, Iran, the Strait of Hormuz, whether it's uncertainty with respect to what the fiscal package might look like in the US, uncertainty with respect to tariffs. All of that was largely priced in. There's still a lot of uncertainty that's out there, though. We still have a July 9th tariff deadline, so the reciprocal tariffs are going to expire. We have one trade deal that has actually been inked. I think now that we're through this, the administration can start to focus again on racking up more wins with respect to trade, build on some of this momentum. So hopefully they're in the mood to negotiate more feverishly. That could provide additional support to risk assets. And through all of this uncertainty, my main message to clients has been not to chase upside, wait for opportunities on the downside. We haven't really gotten some, but as long as you've been well diversified in your portfolios, you've weathered the storm fairly well. And that's why I've liked the US, but I've also liked markets like India that have provided a ballast through some of this uncertainty. And that remains the case today. I think the Fed's almost a non-event to kind of put a bow on your total question, Neeraj.
Matt, very good morning. Tamanna here. I'm just wondering, with all the ifs, buts, conditionality attached to both the ceasefire statements from Donald Trump as well as the Iranian side, can we really be sure that this is done and dusted?
No, you can never be sure anything is done and dusted, especially under the current administration in the US. But I think the involvement of the US and the way Israel attacked Iran heading into the US involvement has really incapacitated the regime. So their ability to respond has been greatly hampered. What they can do has been hampered, and it's not going to serve anyone, especially because their closest allies are staying out of the fray. So again, I think we can write off at this point the worst left tail scenarios that could result from this. Could there be uncertainty? Absolutely. I would be leaning into that uncertainty as an investor, though, if you do get a sell-off as a result of any additional skirmishes that might happen.
Both of you, Matt, Muyu, thanks so much for joining us this morning. Pleasure having you on the program, and thanks so much for that insight.